Hey, we're live. Deribit live, that is. Thursday, August 22nd. I'm Shane, along with Richard. As always, we're the Rogue Traders, and looking forward to chatting about some Bitcoin options stuff. It's actually, we were just commenting before the show that everything is kind of quiet. It's like everyone's waiting for something to happen. And I know the unemployment numbers are coming out in half an hour. Maybe people are waiting on that as well, but got some interesting things to talk about. Wait for some more people to roll into the room. And just say hello to everyone. Core from Holland, great to see you. Def. Nick, Jap. All right, more people rolling in. And I realize today is the birthday of one of my most favorite composers, Claude Debussy.
Huh.
It's always nice to listen to him when I'm working. Relaxes me. I smash less keyboards and monitors when I'm listening than I normally would. Okay. Yes, as a reminder, I'll just say, hey, please put any questions. We have a Q&A section session at the end. Please put the questions in the Q&A section of the chat. What was that, Richard?
I was going to ask you, which asset has made you smash most keyboards in time?
Good question. I used to go through phases where I'd trade something for, a couple of weeks or even maybe 4 or 5, 6 months. If it was really hot, there was a lot of liquidity there and I could get in and out. Like I went through times when I traded AMAT, like that was like my bread and butter all day long. Or, there's just so many different stocks over the years. Went through a phase where I traded a lot of gold, but it was usually the ETF GLD I traded. But good times. All right, so to do Nick, huge irony. I'm learning Clear to Loon. Very good, Nick. Yes. I mean, it's such a classic piece, isn't it? It's just feel good music, isn't it? All right, let's get rocking and rolling here. More people still rolling in, but that's fine. Let's just discuss sort of, it's a general topic. Look, a Bitcoin roller coaster breakout, because every time it's right here, right now, Bitcoin at 62 or 61, 62, everyone's freaked out it's going up. I know we've got some short calls around this area that expired tomorrow, Saturday, Sunday. This is Bitcoin, right? Every time it goes down a few percent, it's like, and up, same thing. But there's an interesting aspect here that I think we want to talk about today. And I think that's some interesting news articles that have come out recently and some thought. Now, we can, I guess we could do this every week, because every week there's always someone saying, oh, Bitcoin's going to 25,000, Bitcoin's going to 500,000. Sure. You got to kind of eliminate that noise. But some more technical things came out recently, which I think we'll be interested to talk about. Let me just stop this. I'm going to go ahead and share my screen. If I can find it here, I think that's it. You can see my chart, yeah?
Yeah.
So here we are. Someone asked me in a group chat, what's going to happen today? No. So I do a lot of scalping. Well, if you guys know me by now, what do I always do? Support and resistance will always hold every single time, guaranteed. I guarantee support and resistance will always hold every single time, and you should always take the trade against it until it doesn't. And then you'll take a hit on that trade, and then you move on with your life, right? So if it goes up here, you sell it. Comes down here, you buy it. You could double sell. You could double buy. You could make this back and forth for 2 hours, 2 days, 2 weeks, 2 months, however long. Eventually it's going to bust one way or the other, and you take a loss. But that's okay, because you just made 3, 4, 5, 6 trades profitable, and you move on with your life. Same holds on true for me. And then, again, this is short-term trading. We're trading maybe options or perps or futures that are expiring today, tomorrow, in 3 days, that type of thing. Shorter term stuff, which we like to do. Well, the perps don't expire in 3 days, but you know what I mean. If you're scalping, you want to buy it here and sell it here. That's all there is to it, or sell it here and buy it here. Now, I started to wonder a little bit the other day because I still am leaning towards the long side. I think there's a good chance we'll pump up here. This resistance will turn into support. We'll bounce around here before we eventually make that breakout. And is that going to happen this month, next month, October? I don't know. I think, Richard, August and September are historically down months, aren't they?
On average, yeah. I mean, you've got to be careful with this. I can share a screen if you want.
Well, let's come back to that in a bit.
Yeah.
What I'll do first is I just want to share a little bit of this article, and we can talk about that, and then you can talk about some of the other stuff that you think kind of counters it. And just so we know, we got this. We got unemployment claims coming out in 20 minutes, and then flash manufacturing PMI. So we might see a little bit of action. So this article I noticed yesterday. I think I posted it yesterday in our Discord private Rogue Trader Discord group, and it was talking about the derivatives bets leaving Bitcoin ripe for a short squeeze. And this was interesting. So I was like, what? And they're talking about a mix of both negative perpetual swap funding rates in recent weeks and a spike in open interest. And basically they're saying the 7-day average funding rate, which has decreased since the market crash on August 5th, hitting minus 2.53%. And that's the lowest since March of 2023. So this low average 7-day funding rate combined with all this open interest is what they're saying, could end up being a really big squeeze. And I know that you were recently looking at open interest. And I think that that might be interesting to discuss.
Well, this is open interest in perpetuals, and so the inference is that more people are short perpetuals than long. That's not possible because they all have to balance off, but the market is shorter perpetuals than long, thinking things are bearish, and maybe. And then I have a competing news story because. And it's kind of interesting that we're resorting to reading the news because we're normally.
Well, when there's not much going on, it's like, okay, what do I do?
So let me have a look here. I can share this screen. There we go. This one's saying OTC desks now hold over $22 billion in Bitcoin. So what this is saying is that if you're a miner or other sort of large producer or acquirer of Bitcoin, and you want to dump them. You want to carefully sell them, you would contact an OTC desk and you would give them some of your Bitcoin, and they would then layer that Bitcoin into the market or find private buyers or what do they do to try and quietly exit your position. And they're saying that this is the largest amount of Bitcoin in the hands of OTC desks since June 2022, which was a part of the sell-off, wasn't it, last year, the bear market, 2 years ago. And then you see the point here at the bottom. Miners often turn on OTC deals to sell Bitcoin. So the implication here is that actually either there's a narrative of OTC desks holding Bitcoin and a short squeeze beckoning, or there's a narrative of a short squeeze and miners intend to sell Bitcoins into that squeeze. And I don't know. I mean, if you had to ask me to choose. I'm biased because I want the market to go down now because I've got a bunch of calls expiring tomorrow that a little bit in the money, and I'd love the market to go down. On balance, probably if you were just using those two data points, the more realistic narrative is that some market participants in the know have shorted perps ready to sell physical, and so probably a down move is coming at some point. Whether it'll come in time for me to not have to roll my calls is another matter. But
well, those calls expire. When are your calls expiring?
8 o'clock tomorrow morning. Yeah.
Oh, okay.
I've got. They're ranging from 60 to 62k. It's not like it's not panic stations, but it's just like again, really.
Yeah. Well.
And then what have we got on the liquidity heat map? I quite like this. I use this quite a lot. This is showing that there's actually quite a lot of short liquidity pain if we get back up to 70k, and a little bit here. I say a little bit, 800 million at 66 and 65, and even like a billion at 61.
Mhm.
So that might be the short squeeze sort of danger they're talking about. And the market does tend to hunt these sort of concentrations of liquidity.
Mm-hmm.
That's the 1 month map. If you look at the 1 day, so this is kind of, what can I guess the market's going to do today? Well, actually, it looks like it would like to come up and hunt this liquidity at 62, or maybe go and hunt down the stuff down at 60 first, and then maybe.
Yeah. It's important for people to realize too that that's very dynamic.
This changes hour by hour, and it's just like I use it if I'm thinking, if I'm going to open a strangle, where would I do it? Well, I definitely wouldn't do it below 62 today, and I definitely wouldn't do it above 60. That's kind of where I would be thinking. And what else was I looking at? Oh yeah, the old. This is I love this site, Bitcoin Monthly Return. It gives you current Bitcoin price, which is quite up to date, and also gives you all of the returns for every month ever.
Oh, I haven't seen this site before.
It's cool, right? And it summarizes them by year and by month, and you can see that there's a very definite trend, or a very definite average, that August and September are negative months on average by quite a lot. September particularly is like a mega negative month.
Well, why didn't you tell me this before I bought a long call spread? I did a 1x2 this morning.
I've been trying to tell you. However, it has to be said that there are some quite large numbers here that skew the results, and so I really wouldn't treat this as a statistically valid sample. Like everything in crypto, treat it as if it's a dog turd wrapped in a cat turd. Wrapped in explosives, but
explosives.
And actually some really interesting things I noticed about this is, do you remember the bull market year 2021 when we all got rich and thought we were clever? There's actually only 2 months in that year where that really mattered. 3 months that really mattered in that year. And that was February, March, and October. And half the year was down months. Half the months that year were down months, and it was a mega bull market, which is
I didn't know that. But looking back, you're right. The moves were explosive to the upside, and then it's kind of not much. Yeah.
And actually, I've been comparing that with this year, which is quite interesting, right? So we've seen almost similar movements this year. The only difference is May, and you could argue that that's because of whatever ETFs or whatever. But actually, if you were sort of looking at this cold, you'd think, you know what? It's possible that 2024 could pan out a bit like 2021. In which case, we'd expect, well, in 2021 we had a big up month in August, against the trend of August tending to be negative, and then September negative. September's almost always negative, interestingly, and then October, of course, explosive up. And I think I'm kind of okay with that as a narrative for this year. Still, I think that's it seems like a reasonable bet to me, and it's a bet. It's not a prediction by any means. But given the state of the market and the fact it's summertime and yada yada, and then the growing gradual inflow into ETFs, we'll find a way to even it all out. Plus, we've got this massive inventory OTC to sell off. It kind of feels like it could do the same, right?
Yeah, it could. And I think as things get in closer to the U.S. presidential election, we might get some volatility as well and some shenanigans. So I think I think this autumn's and winter's going to be a wild ride, personally.
Yeah.
I really do. So just kind of batten down the hatches and be prepared for that.
And that kind of plays into what's going on with our Synth Miner account, which you might remember is in recovery mode at the moment. And sorry, you haven't shown the graphs yet, but we're up a little bit from last week. But so we're actually just coming to the end, we hope, of our nursing period, where we're preparing this book to get back into shape so that we can start making money off it again. And what we've, for those who missed it, we had a whole bunch of in the money put spreads, which we rolled out to December. a few weeks ago.
We had to do that when the price plummeted down to 48 or whatever the hell it went down to. Yeah.
So what we did was we wanted to what we did on our prop books, or what I do on my prop books, is I would take something like a 5-lot 5x put spread, and I would roll it into like a 2x naked put in December, but with the same total notional value. And so I wouldn't lose any cash off the account. I would just go and store that risk later at a later date, so I could worry about it later. Because you tend to find that longer dated contracts have much lower gamma, and I wasn't too worried about a Vega spike out in December just yet, particularly on the put side. And so I thought, roll all that stuff out to December. Let's deal with that later. What we've got to deal with first is cleaning up the front end of our book. And so what we've been doing, of course, is getting the front end cleaned up. So we've now got no puts left on. No short puts left at the front end, and we're just finally dealing with the last of these call spreads that we've been chipping away at for the past couple of weeks. And so come tomorrow expiry, provided it doesn't go blasting up and annoying me, we'll be free of these call spreads, and maybe even by tonight. It depends how things get in the US markets, and then that will leave our book basically short puts in December, which I'm perfectly happy just to leave forever. But I think I'm quite happy to be long Bitcoin at 60K in December. We've got some cover here in October, which is burning a little bit of decay. And what we're going to do is move some of this, start to move some of this risk forward. So generally what I would do is say to take a here's like 1,000 basis points of risk in size 0.1, and I'd be quite happy to roll that into a Iron Condor, maybe a week or 2 weeks out, in size 6 or 7, 0.6, 0.7, to a total notional value of the same 100 bips of Bitcoin, and then I could buy this back. Now on this account, the account's too small. We can't go writing 0.7 lot Iron Condors. It's going to blow our margin out of the water. And so what we'll do is actually use a 1x2 in December to buy this 58K back, sell something like the 50,000 instead. So we've recovered 500 basis points of what we've bought, and now we've got 500 basis points to go and deploy somewhere else in the book, and we'll go and deploy that closer to expiry. And we'll try and do it in a way that we're covered 1x2. So again, we can be a bit more aggressive, and then we might spend a week or two rolling that out as one side goes wrong, and jumping in and out of one side and working it. But eventually, we'll get out of that position, and then we're left with sort of notionally 0.2.5 positions in December, and then we'll take the remainder of the 50K. Position, and we'll buy that back, and we'll redeploy it closer to the date, and work that, and then we'll come back for the 59 puts, and then we'll come back, and we'll just work it that way. So we're using these December in the money. Well, sorry, they're now out of the money, but they were in the money. These December puts as a storage of cash on the account that we can then turn into profit, piecemeal by piecemeal, while maintaining the margin sort of sanity of the book. That's kind of our strategy here.
Yeah, I think we're going to start executing those trades tomorrow after the CME expiry. So we can update everyone on that next week on how that's going, and can see for yourselves. I think it's also worth noting too that, a lot of times people, oh my God, that, the market makes a big move, and you're feeling really bummed out and your equity is down, and you've had to roll something out, whether you go up or down, but it's always out, and you feel bad. It's like, oh man, that's 3-4 months away, and now I got to wait. So most people don't think about bringing that back in, and we just think about, okay, this is causing us, it's a thorn in our side. We're going to move it off into the future. We can leave it there forever if we want to, but we intend on pulling it forward and getting that decay as fast as possible. And this is just another way to do that. And
here's why. Because right now there's almost 0.1 of a Bitcoin of cash on the account, but it's only currently net worth 0.0755. So we want to close that gap as fast as possible and get back to all cash, and then we can start putting on more risk, right?
And I think one mistake people will make is they'll roll something out, and then they'll go back to their regular trading, just kind of thinking, okay, I rolled it out, forget about it. And they use up any available room for risk just with everyday stuff versus thinking, okay, let's pull the front end risk off like we have, then bring it in. So you've got to kind of stop, clear your front end out, then start to bring stuff forward.
Yeah. And it's
the margin. Yeah.
And it's really. Do you want to show the slides? If I stop sharing, you show the slides, and we'll show the graphs, and I'll explain why.
Or we could do that next time because we're running out of time.
Oh, sorry, man. Well, I was just going to say that whenever we're rolling a position, we're always looking to roll it for a credit, and we're rolling for a credit, rolling for a credit, rolling for a credit, and it's like we're always snorting a bit more coke or injecting a bit more heroin, right? Hoping that tomorrow is going to be better than today. It's kind of like that, right? I mean, not that I snort coke or do heroin, but that's what I imagine it's like.
Hang on.
Literally, I'm the guy who spent 10 years in the City of London and no one ever offered me any coke. I'm that boring. But anyway.
Yes, old traders. Yeah, it's usually ketamine nowadays. By the way.
Okay.
Just right.
I'm behind the times. So. But we're kind of always chasing the dragon, so to speak, aren't we? When we're rolling our positions, we're always trying to come on, let's get it in. And at some point, that catches up with you, and you've actually got to pay the price. Yeah. And this is us paying the price. We've pushed it, and the market's told us no, you're not having that. And now, okay, we're going to go back and do the hard work and turn all of that pent up potential back into profit. But it'll take us like 6 or 8 weeks to do it, but we'll get there.
Yeah, and it'll just depend if we have to manage those short terms, how much we have to manage them. That's the only consideration. If we can bring an iron condor forward to end of the month, for example, not much happens. The price stays in a couple $1,000 range. We're fine.
I think if we should do something like spread it in like like 2 days, 3 days, 5 days.
Get smear it out.
Smear it out over time and over strikes, and then claw back whatever we can. Yeah.
I assume you have a clever spreadsheet that's going to keep track of that because if I have,
I've got a super duper spreadsheet here.
And just while you're looking for that, Volodymyr says thinking will be around max pain level 30th of August for short term. Yeah, it could be. We could.
Here we go. Yeah. Enter screen. Here we go. Full screen. Here we go. Here's my little. This is my rolling calculator spreadsheet. I could probably do this using the position thing that Deribit make, but I can't be bothered to learn how to use it. So I wrote my own spreadsheet to do it. And this actually computes all the fees and everything for me. And computes. I enter what I'm doing. This column here is optional. This is just here so I can copy paste from the trade log into this blue area. But if you fill in all this stuff, it tells you net whether you're going to make a negative or positive cash flow. So I can sort of use this to plan my rolls, or I can get halfway through a roll and then figure out what can I afford to buy now for cover, and so on. That's that.
Cool stuff. Hey, we just got a little bit of time left. Let me start blasting with the questions here, Richard. Question from Def. What are the plans if markets jump up and down? Well, buy low, sell high, generally. But a serious note, I think it's a good point because I was like, screw this after that 30% down move. I'm like, I'm not going to systematically sell anything anymore. If the markets aren't moving, I ain't doing anything. I'm just sitting tight and I'm waiting. And then I'll jump in when there's a bit of steam blowing off on each side. So it's really got to roll with the punches. And I think the important thing is you got to keep your risk low.
It's interesting that you say that because your instinct was right. So I run some systematic books for some funds, and for the past 2 weeks they've literally printed no money. They've lost nothing and printed nothing.
Just too much volatility.
There's just too much. So it turns out that the hourly realized vol, and it is hourly these days, almost exactly equals the monthly vol that we've bought or sold options for rebased back to hours. So actually the cost of hedging has been equal to the premium available literally for the past 2 weeks. It's frustrating, but you just roll with it. These periods clear out.
Yeah. When you place your support and resistance level, what time frames you look at? I saw you had the 1 hour chart on. Yeah, I just typically trade off a 1 or a 4 hour chart when I'm trading any asset. To be honest, that's just what I look at. Yes, occasionally I'll back out and I'll look at a daily just to see if there's something, a big area I need to be aware of. But when I'm scalping, I'm using a 1 or a 5 minute. But I think a 1 or a 4 hour gives me all I need to know, or I do look at the two. Question from Dominic. What do you think about swing trading perpetuals with tight stop loss entries to hedge 30 to 40 DTE short strangles with 20 delta strikes? Okay, swing trading perpetuals to hedge the 30, 40 DTE short strangles.
So you're going to be...
That's an interesting...
But so trading futures is necessarily short gamma. And so, sorry, is he long or short strangles?
Short strangles.
So you're short gamma with swing trading, and you're also short gamma with the strangles. That sounds like a strategy that we run. Actually, one of our higher risk return strategies we run systematically, which does pretty much that. It buys high, sells low. Sorry. Sells high, buys low futures, and if it gets too far offside, it uses short options to neutralize the deltas and pull in premium to get it back on side. It's super scary. Some clients like it because it gives great returns, but it's volatile as hell. So you can easily expect a 20% drawdown on that kind of trade. If you're comfortable with that, go for it.
Well, I mean, if now I'm thinking about this a little bit. So if I've got a short strangle and one side is starting to get pressed, I'm going to name this strategy called running with the dogs. I'm going to run with the dogs on that. So if it's going down against my puts, for example, the price is coming down, my short puts are starting to look pretty ugly. I'm just going to sell perps down along with it to offset, it's hedging, right? Offset some of that and start to scale out or quickly reverse position, whatever, just to take some of that sting off. So you're making on the perps what you're losing, or some of it you're losing on the.
Yeah, but if you're going to do that, you better close out your calls, because if it reverses suddenly, you're now offside twice. And the margin engine will notice as well.
If I'm short, so as soon as I reverse, I can also take it long. I basically just constantly using futures long and short to flow back and forth in between those strikes or outside of those strikes.
So that's gamma hedging. That's pretty much what I do systematically. And for the past 2 weeks, that's made no money. I mean, for most of the year, it makes a lot of money. But if you're accurate with your hedging.
A question from Gene. Do you think it's worth it to use a 365-day calendar schedule for pricing crypto options, given the little activity on weekends?
Well, I've mentioned this before. What the market makers actually do is every day in the calendar has a different length, and they'll treat a Saturday as 0.2 of a day, and the Sunday as 0.4 of a day, because it's crypto, and they'll treat a Friday from US close to Saturday morning as 0.1 of a day or less, and actually much less. I mean, almost zero time. And then they'll go scan through that calendar and they'll total up the number of actual day weights, and they'll say, well, there's that many days in a year, and it'll be somewhere close to 260 or 280, because in the end. And so actually, when that's why you see vols drop on weekends. It's not because the market makers are actually marking down vols. It's their models were already marked to these different length days on weekends using the same vol. But that has to be translated into your clock time on the exchange, and the exchange says, well, they're quoting this price and there's this many days to run, therefore it's only 40 vol rather than 50. So that's what market makers are already doing.
Yeah, and traditional markets too, which don't trade on weekends, it's also built in. So if you're buying or selling a 30 option, it's built in those weekends.
Yeah, and we did this in the FX markets as well, and we also have different weights for each whole holiday day.
Question from Johannes. What's the rationale behind the liquidity hunting? I think when you were talking about liquidity hunting on that heat map, who profits from that?
Oh, this is very simple, and this is like the law of the jungle of life. It's well worth learning this in everything you do. The big guys who know what they're doing don't need leverage. Rich people don't use leverage, not for gambling, right? They use it for sure things. The only people who need leverage are poor people. And so anyone who's got a leveraged position in the market is poor, which means that they are scared. It means that they can be chased off that position if you put it under enough pressure. And the big guys know this, and they've got enough money to whatever percent position you've got on at 10x or 50x or 100x, they know that they can just steamroller through it by buying or selling the market, causing you to panic and bail, and forcing you into buying back or selling your position at a loss. And they have tools. Well, there are public tools available. You saw the heat map that show you pretty much the max pain points because it tracks who where each futures position got entered and by how much, and how much liquidity is on the exchanges, and so they can infer how much leverage is in the perps market and the futures market. And so and then it's just like so the velociraptors who have all the money just come in and say, well, okay, we'll just buy the market up to there, we'll sell the market down to there, and they just clean out everybody. And that's why punters lose money, because they're desperate poor people who are trying against the odds to win in their highly leveraged bets against people who know exactly what they're doing and are rich as hell.
And that's another great reason why we love to smear both strikes and expiries. So don't have everything concentrated on one particular day and expiry. Because when you see that grouping of that liquidity there and you're part of it, well, guess what? If you have to roll, so does everybody else, and everyone's rolling to the same spot, which then jacks up the prices for those, and it just, you're just with the herd, right? So
I have a rule of thumb here. Well, back in 2005, I was struggling under pressure in the FTSE market. I was getting squeezed all the time. After a run of 18 months of making money hand over fist, I used to wake up every morning with this horrible feeling in the pit of my stomach that I felt uneasy and I was constantly worrying about my position. And I've learned that if you feel that, it's because your position is too big. You should just cut the position and stop worrying about it. Take whatever loss you've got, because whatever loss you've got now is going to get bigger when that whale comes along and hoses you down, hoovers you up.
Okay, Vladimir. Of course, you have a strategy here, Vladimir. All right, so he wants your opinion on the strategy. Let's say we have a 0.1 Bitcoin account value. We spend 6K on it. So we short some amount and sell pretty heavy close in the money puts. So we have a covered put.
Yeah.
We roll if the price goes up, for example, in 1,000 strike steps.
Yeah.
And roll and roll and roll. Looks like in this case, the USD value we're always covered, but we can gain more Bitcoin long term. It's kind of a lot to swallow there. You understand what I'm saying?
Yeah, you're selling in the money puts. What that's called is an accumulator. So this year, a really good trade has been sell the 65K put and the 75K put, and then just keep rolling that every week. It scares the living bejesus out of you.
Yeah, it's not for the faint of heart.
I mean, literally, you don't want to do that in size, but it prints money, and if you can stomach it, you'd have made a fortune. So it's called accumulator. It's a well-known strategy.
Question from Johannes. Isn't rolling similar to a martingale, essentially adding more and more risk every time and hoping to be right? I'd say no. I mean, so those who are not familiar with, I'm not an expert in the martingale. The martingale is you're wrong, you double in, you're wrong again, you double that again, you keep doubling. So as long as you've got margin, things going to eventually revert to the mean. You'll be okay. And a lot of people think about rolling and adjusting as kind of a trick, but really all you're doing is, if you're rolling, you're locking in a loss and you're just reselling that somewhere else. You're not necessarily increasing your risk. If you roll it out further in time, there's some time risk, I guess, but you can sell it. You can do it for a credit or a debit or a flat, whatever you want. You can double it and have it closer. there's so many things you can do, but I think inherently it's not necessarily increasing your risk. It's just give you more time risk, but more time to be right too, right?
I mean, if you were doubling your position every week, yes, it's definitely a martingale.
If you doubled it, but
and you
would normally double.
The margin system would stop you pretty quickly. I was going to say that what we do, Shane, when we're rolling, so we often pre-roll. So often if we're wrong a little bit, rather than, and we've got like 4 days to run, rather than roll the position to another week and waste a whole another week of opportunity, what we'll actually do is roll half the position up to another strike on the same week, and then sell a put with cover to make up the difference of the cost of the long call spread that we had to buy to roll the position up or roll the call up. And by that way, we're sort of gradually narrowing in on a runway of a landing spot of expiry, and we're hoping, in the course, that the market's going to expire in our sweet spot where we get away scot-free, but it often doesn't. But actually, what it means is that when it does land and we're off to one side, the other side is right. So we've got less damage to roll, and then we'll roll it in the same size to the next week. So it's not like we're increasing the bet; we're actually keeping the bet size the same, but we've already taken in some precautionary premium on the way by essentially. So if we've got a strangle, market's going up, our calls are always under pressure, but we're buying back puts, selling puts higher, buying back puts, selling puts higher, and then we're rolling up calls and selling puts and calls, and so we're just gradually moving with it. And effectively, what we're doing is delta hedging in steps. It's actually very little different to doing daily delta hedges with futures in terms of outcome, but it just means we don't have to worry about futures and forgetting. But it means it generally means that we'll do better than a martingale. It means that every roll of the dice is actually not doubling the bet, but maybe it's 0.75 of the bet. So we're actually reducing the risk every time we roll.
You said when we're a little bit right or a little bit wrong. Is that like being a little bit pregnant?
Well, the difference is that in markets you can be a little bit wrong.
Okay. All right. Question from Johannes. One more question. Do you consider historic realized vol versus implied vol? Past week's VRP was negative.
On what time scale? Because maybe on monthly it was, but on hourly definitely wasn't. And details matter, because if you're, if you're not hedging, then great. If realized vol is lower than implied, fantastic. You know, over your time period, you will on average win, as long as you've got gamma spread through all the strikes.
The one that says daily, by the way.
Yeah. So what we found was that the hourly vol was quite aggressive, but daily and weekly, and if you look at monthly, it all kind of smooths out. It's been quite an interesting couple of weeks. As to whether we consider it, not really, because it's already happened. So we're generally more worried about what's going to come next.
And Gene, just to follow up, you asked, so everything is already priced in? Yes, and I think you were referring to the volatility and the drops of the weekend. It's already priced in. I think that's what you're referring to there. Well, I think that's it for the questions. So we've got a little bit over time as usual, but hey, fantastic questions, some interesting stuff. I didn't notice did the market move? No, it hasn't moved too much. It's just
we're off a little bit,
a few $100, yeah,
below 61. If it expires here, I'm happy. I'm a little wrong enough to not feel it.
Yeah, I hear you. Yeah, no problem, Johannes. All good.
Oh, we got one more question here from Odie. Is BTC going to go below 50K again? That's an interesting question. I honestly don't know. To be honest, if that story's right, and there really is, how much did I say?
That's a lot of Bitcoin.
It's a shit ton of Bitcoin, isn't it? Waiting to be sold just when everyone else is getting long. I mean, yeah, it could be carnage, right?
Yeah.
I mean, any penny puts are right. I'm definitely double covering at the moment, and calls, by the way.
Yeah, and I think we both noted that the ETF inflows were positive yesterday, but they weren't stellar. But we do have ETFs buying, and there is also the discussion to have too. Well, how low would BlackRock let that go? They've got investors, they've got things going on. And if it does go that low, I wouldn't expect it to stay low for too long.
Well, is that you cutting out me? Well, so far they've allowed it to go below 48k. Allowed it, momentarily.
Yeah.
Which is
Volodymyr, thank you for your input here. He's like, I can place a pretty big bet that it'll definitely be below 60k one day. Yeah, I'll take that bet. Yes, I think you're going to be right.
Yeah, that's a pretty high premium one-touch option there.
Yeah, good stuff. Hey, everyone, thanks a lot for joining us today and having a chat with us. Always good fun. Next week we will. Richard, I should be able to execute our strategy probably tomorrow.
Yeah,
regarding bringing that risk forward.
I was going to say to everyone, if you guys want to watch us do it, it's going to cost you $2 a day. So, I mean, super cheap, right? Come and join us on Patreon.
Yeah.
And Shane will shamelessly share the link at some point.
just go to Patreon Rogue Trader Academy, or just go to roguetraderacademy.com, and you can hang out with us and chat every day and make jokes. And
how many Bitcoin did I say it was that they've got stored up in OTC desks?
I don't remember. You were sharing the
368,000 Bitcoin.
It's a
shit ton.
That's an enormous amount of.
I mean,
now, how much is normally just held in OTC desks? Anyways, I don't know.
Probably about half that.
Yeah. Okay.
The tally has increased by 153,000 Bitcoins in 3 months.
That's extraordinary. Yeah.
And the ETFs are buying about 1,000 Bitcoins a day between them.
Mm.
So there's a year's worth of ETF inflows sitting in OTC desks, which
double cover your puts.
Yeah, man. Because I'll tell you what, right? There's no reason for any ETF to go to the market at all. So any ups, it's entirely possible that any upswings we're seeing in price are utterly and only to do with sentiment and not to do with ETFs.
Mm.
So be careful out there, guys.
Geez, we're trying to get off the call. We can't. Antoine just says, but the OTC desk will match orders. They won't sell the whole pack.
Okay, if you say so.
See, it's crypto. Anything goes to all.
If I had an OTC desk and I saw the price screaming up in a short squeeze because people couldn't get out, and what I might do is just sell perps into that, or start buying puts, and then one day dump all that BTC. I mean,
let's not get into things that in the TradFi markets would put us in prison. Let's keep it clean. It's family friendly show here. All right. Hey, again, thanks everyone for joining us. We've gone way over time. Sorry about that. We'll see you next week, and happy trading till then.
Thanks for coming, guys.